a little talk about what we have covered in the past. We've been dealing with the CARES Act and many of the programs underneath it, in which people could borrow money, they could possibly have forgiveness. And we've talked a little bit about planning and looking at what COVID-19 actually means to you and what it might mean to you in the future as we go forward. I'm very happy. I'm John Pastore, and I'm very happy to address this group and have this opportunity to be able to introduce our guest speaker, Jay Jackler, CPA. Just a little bit about us. We are the affiliate for financial planning for the Vermont Medical Society, and we have been in that situation for many years now. We believe in financial education, and we believe that's really what's important, especially during this time of the pandemic. It's more important than ever that people understand what their options are, how they can plan, what's available to them. And that's part of what we are going to discuss during this third part of the series. In the beginning, we talked about the initial CARES Act. Then we did a little update on that. And we also talked about different elements of it that a lot of people weren't familiar with, the tax provisions. We think these are some of the most exciting provisions for people to use. And tonight we're going to continue that. We're going to have our guest speaker, Jay Jackler, address many of these tax issues. And just as a quick introduction to Jay, Jay is a CPA. He has a boutique CPA firm. He was a member of a national CPA firm, and he was a partner in a regional CPA firm. And he really gets under the hood when it comes to understanding tax planning and tax provisions. He's going to talk about the CARES Act. He's going to update a little bit on what has happened with the CARES Act recently. And we're here to answer questions. So if you should have a question, you could raise your hand, and we'll try to do it with a group like this and have people ask particular questions that we can answer. And we'll just go through this, from slide to slide. And later on, I'm going to talk a little bit more about the personal nature of COVID-19, because every physician has been impacted in this by one way or another, maybe with less income, maybe with a loss in their portfolios, you name it, it's out there. This is something we have never experienced before.
Well, good evening, everyone. John's pulling up my PowerPoint, and it could have changed in the last 5 minutes because the first thing I found out this afternoon from one of my banking sources is the federal government has now stopped the larger banks from being able to process loans in favor of the smaller banks. So if you have an app with one of the larger banks, it's being frozen right now. So this evening through my client base, we're reapplying through some of the smaller banks. And John, that's actually since I spoke to you half an hour ago.
Wow. And I can attest to this because we had to approach banks also. And in so doing, we went to some of the larger ones, the national banks, and these national banks are so backlogged, they can't get to you. And actually found a local bank in Vermont that was very courteous, very understanding. And so we can address these things later on. But it's very important for you to find the right bank to get the right connection here. Thank you, Jay.
You're welcome. I think you've got my title screen on. I'm Jay Jackler. I'm located in Boca Raton, Florida, but I have license in New York, Florida, Pennsylvania, and Vermont over the years. And I have a client base throughout the United States, in both medical, aviation, and distribution businesses are my main concentrations, but these people own a varied kinds of businesses. So I have a very wide client base throughout the country with all people who are looking for business and tax advice. Next slide. Will be a protective disclaimer. This disclaimer is just to make sure that information changes on a moment's notice. I've never seen, it would be like the body morphing every half an hour, so you'd have to go back to medical school. I've never seen so much reading and changes by organizations who are not prepared for this at all. Disclaimer is just to say that I'm not rendering advice to your particular business for protective reasons, and the accuracy of information is correct as to the last time I was preparing this presentation. Next page, please. Show me the money. This is an unprecedented historic event. There's been a tsunami of applications with guidance lacking. Simplest things, for the 8 weeks of payroll, what happens if you get your loan and it's supposed to start the day after you get your loan? Well, what happens if that's midweek in the payroll cycle? Are you supposed to split 2 weeks? How do you split the weeks? The AICPA, which is the American Institute of CPAs, came out this afternoon with a list to the SBA of these impractical things that no one's addressed. The banks, the SBA, besides people working from home, are overwhelmed. In a typical year, the SBA gets $30 billion of loan requests. They received $300 billion in just a week's time. So the volume and understaffing at the SBA, as well as the banks are making their own rules up, as well as they're getting slapped on the wrist for who they're giving the loans to. Some of their public company clients first, their best clients. And that's why you have to look at at this time, some of the credit companies and the smaller community banks to get some response. So after we find me the money also. Before I go on to the loan provisions, I cannot emphasize enough when it comes, it should be a third look if you've been following my seminar, but a second look is net operating losses. And for income tax purposes, a net operating loss is a result when the allowable deductions or expenses exceed the taxable income within a tax period. In other words, your expenses exceed your income. This net operating loss can generally be used to offset the company's tax payments in other tax periods. Starting in 2017, this could only be done in future tax periods. Again, business expenses is greater than business revenue. That means you have a net loss. The CARES Act allowed you to go back now 5 years. Looking at the next slide, I recommend you work with your tax advisor to create a strategy that helps you optimize the net operating losses for the 2018, 19, and 20 period. They don't have a list of things to create losses in prior years. Please call me. I'll help you out, because the new law has such things as change in depreciation rules. And the depreciation rule is the way you expense a capital asset, a building, a piece of equipment, over a purchase of a practice, perhaps is not a fixed asset, but it's an amortizable asset over a period of years. There was a major mistake in the 2017 tax law, which they had a class of property called 15-year property, which is basically retail leasehold improvements, which you could have been caught up if your practice had leasehold improvements. What has been allowed is this property is now able to be depreciated over 15 years instead of 39 years. Huge first step, but once you're classified as 15-year property, in 2018, 19, and 20, there's what's called bonus depreciation. That means you could take 100% of the asset in 1 year and write it off as a deduction. So by way of example, you bought $100,000 of new computer equipment to do telemed. You can expense that in 1 year and carry it back to previous years. The leasehold improvements of redoing your patients' waiting room, because there are going to be changes if you envision the distancing rules coming about. That could be written off under this provision 1 year. There's a form that had been put aside by the rest called 1139. And if you think about it, you say, well, what's the difference of taking the depreciation now or later? Well, if I can carry back the loss in 2015 or 16, the tax bracket was 39.6%. In 2020 or 19, the top bracket is 37%. So it's a permanent 2.6% more. So a deduction you take back and get 2.6% more from is substantial. So on every $100,000, you're going to get a net $2,600 you're going to make permanently, let alone the time value of money, would you rather write off something over 39 years or 1 year? So this has allowed elections to be changed. Those are the best tax rules. And there's a whole host of things you can do to catch up in 2020 or even 2019. Even if you filed, it's time to amend that return to take additional deductions that can go back in earlier years. This should not be overlooked, and I can't tell you how strong of and how potent this can be in the right hands on your behalf. There's defined benefit retirement plans. There's all kinds of planning one can do to catch up on things, and I recommend it. The next page, the money. We've given this before, and tonight we're talking really about the payroll protection program. That's the item highlighted in yellow. The overview is you're allowed to borrow 2.5 times an average monthly payroll. And that's the loan amount with a cap around saying if you're paying more than $100,000 per year per employee, an average month cannot be more than 1/12 of $100,000 for that employee. Now, the math of it, they give you forgiveness. Next page, John. Thank you. Well, let's talk about the waiting line for forgiveness. And I'll talk about the math on the slide thereafter. What's going to happen is after you've got this money, you're going to have to apply to the bank with rules and forms that haven't been created yet. So to get your loan forgiven. And it's not automatic. You're going to have, there's a list of documentation you're going to have about the payroll, your lease, your rent, when it was established, utility bills. What I've been advising clients is to open up a separate bank account. And from there, in that separate bank account, make the disbursements out so you have a very nice ledger of how you spent the money. Because if you did not spend it on eligible costs, you're going to have to pay it back to the government. Next slide, please. So the debt forgiveness, what is it? How does it work? The amount forgiven cannot exceed the principal amount of the loan. Yes, there's a hiatus on the interest that will be given also, but that's because there's a hiatus on it accruing is why it's going to be forgiven. the debt forgiveness is excluded from gross income. That means that when you're told you no longer have to pay that money back to the bank/SBA, it's not income. Your loan is written off. There is a question that's still unanswered, whether those expenses that you paid with that loan can be deducted. For the code heads, it's code 265, which they're looking at. Makes it interesting when you get to a cocktail party talk. Right now, you can only do it on Zoom meetings, but at least it gives you something that many other people don't know the basis for that. But they're indicating that there's a good chance, as of now, that Section 265 applies such that any expenses paid with non-taxable income can't be deducted. I hope that changes, and we'll be monitoring that along the way for our clients.
Jay, would you like to launch a little quick poll just to see where people stand?
Sure. Would you
Okay.
please?
Okay, if you could just take a few minutes to go in and answer that poll, that would be helpful. There's a few questions on it, but will give us a little feel for where you're at in your planning. I'm going to just hold for a few minutes while we do this. Later on, we'll be talking a little bit more about the personal financial nature of what's going on. That would be one of the last questions in there, because all of us in one way or another have been impacted. And it's just really how much. That's the determination. So I hope you can see the poll. I see some people have joined in, maybe by phone. I'm not quite sure, but I hope you can see it. And if not, we'll forgo it at this point. But let me just wait a few more minutes on this.
I think you're correcting question 7 to, do you know the extent of the COVID-19 provisions on your financial plan? Is that correct, John?
Yeah. Oh, it should be, yes. Do you know? Do you know the extent of it?
Provisions on your financial plan.
Mm-hmm. Mm-hmm.
Obviously, closing down the businesses is shutting down the revenue, but you still have the issues of what other things you're going to do, and that's really should be looked into. I'm interested.
There we go. So I think there's several people on here who can't see the form, and that's the problem is we have this, but we're kind of getting that 100% who answered it said that they had done the PPP. Have you received the funds? Yes, and that's great. And we don't necessarily find that to be it. Have you filed for EIDL? We'll talk briefly about that through the SBA, and that was no. Have you received the funds? Maybe that's the same one.
Not applicable, yeah.
Yeah. The CARES Act has tax provisions that could benefit you. Could benefit you. Do you have a plan to make use of the tax provisions? Well, we have one that says yes, that's good. Some tax provisions allow personal financial relief. Would you be interested in learning how to use them in your own personal plan? Yes. Do you know the extent of COVID-19 in your financial plan, what the extent of it? And the answer was no. We're going to talk a little bit about that and how you find out, okay? I'll just
Thank you, John.
Yeah.
So Here's my recommendation for, first you should develop a budget for the 8-week covered period after you get your PPP loan proceeds. Develop a loan forgiveness template or engage a third party to do one for you. Later on, I'll show an example of the one I've developed for our clients. The baseline would be if no changes to current operations over the next 8-week period, and you want to see between your payroll and certain other costs is, will you reach maximum forgiveness? After you do a baseline, next page, you'll monitor the plan along the way as the budget and from a budget to actional. You adjust the loan forgiveness model assumptions based upon your actual performance, and you keep watching for changes to the PPP law because they're likely to continue to be made, and the documentation requirements for the forgiveness could change also. I think, recommend that you develop the optimal plan. You can do what-if scenarios that could increase your overall forgiveness. The timing of when operations are reopened. When do you hire employees back? If you hire them the last week before June 30, you'll get your full-time equivalents up. There's a lot of details. Consideration of restrictions still in place even if reopened. Level of your revenue expected during the ramp up. You may behoove a company to continue to pay partial utilities, interest, and rent, where you may have negotiated not to, because if you don't have enough payroll, up to 25% of your loan proceeds can apply to that. So if you didn't pay them during the enumerated period, you wouldn't get an offset. You won't get to achieve the full loan forgiveness. There is a need to do a full-time equivalent account as well as wage reduction penalties in your calculations, meaning that if you change the number of employees that you have working for you, or their wage is less than 75% of existing, but you can change that back as of the last day and the week of June 30. And there's some what ifs you can play, and that's what we're doing with our clients, talking about the wage reduction penalties versus how much you're paying out. So it truly goes back to, when you're planning this, are you doing the forgiveness just for the sake of getting money on the loan? You need to engage key personnel, or accommodate, or just trying to survive, or a combination thereof. So in these plans, you can look at the cost of each plan and the net outcome. But I recommend this is something that should be done by every, party doing this. Make sure there's business justification for doing such things rather than playing games. The next 2 pages will be what it should look for in a sample spreadsheet. The loan proceeds, the gross salaries during that period. Self-employed, there's a cap on how much the wages can be during that period of $14,006. Non-forgivable payroll, then you have non-forgivable payroll costs. If you decide to give the owner a bonus of $100,000, then you've put him or her over the amounts paid during the 8-week period that could be forgiven. There's just too many things to go through here, but all this information needs to be gathered. You should be presented with a spreadsheet, something like this, so you know what direction you're sailing and what your targets are to achieve the forgiveness after you've worked so hard to get the loan. So at this point, I'm going to stop and see if there's any questions. Which would
You raise your hand, I'd be happy to unmute you and you could ask a question. We will, for those of you who might have a personal question, we will speak with you afterwards, Jay or myself, to answer those if you want. But if you have one that you think would be helpful to the group or yourself that, is general in nature, be happy to answer them.
John, could you turn the page, please? Get one more page. There's my contact information. If you'd like to call me directly, 561-212-6648, j@abizcpa.com. And at this point, it's faster to tell a CPA with me than driving across town. It's also safer. You don't have to wear a mask and you tell corny jokes.
Thank you, Jay.
You're welcome.
Okay.
Is there any questions, John?
I have not had any. Let me see a second.
So I either covered the subject well or it's been covered already. And
we have, yes, hold on. So I'm going to talk a little bit more about the personal nature of this, because as you said, some of the people have been impacted and most of us had in one way or another. Maybe we don't have as many patients coming in, so we're not making as much money as we were. Maybe we've had a drop in our portfolios. Really, what we need to do is we need to take a much bigger picture approach. So we are the affiliate for financial planning for the Vermont Medical Society. And I think that what doctors do, and they do so well, is that they have a whole process that they use when they're working with their own patients or clients. They assess the situation, they research it. If they don't know about it, they'll consult with somebody who does, they'll prescribe, and then they'll monitor, they'll reevaluate. And the whole process goes right back again. And I think this is a good process for everybody to use. This is how we do that same type of work with physicians. Now, in the case of COVID-19, I ask you, have you been impacted? And we had people say, yes, they had been impacted. Well, really what you have to do is you have to determine first, what does that really mean? To what extent? We think you start to organize things first, you pull them together, pull all your finances together. Once you get it, you develop a plan to help get you back on track. Now, we were just talking today with a family practice physician who actually was involved in a telemedicine or telehealth program, promoting it throughout the area. And I happen to believe that that is the future. I think we're going to live it for a while. We still have a lot of questions to get answered, but it is perhaps what the future is going to bring to our present situation. That's what we're going to live in. What Jay talked about was the CARES Act and provisions, tax advantages that could work to your advantage. So you review employee benefits, you update wills, plans. So how this all comes about is what you need to do first is to account for what you have. And I'm talking more from the personal nature of things. Get everything in order, pull it together, figure your net worth out, figure out what's in investments, how they're invested, what do you have in assets, what do you have in liabilities, pull everything together. This is something we've done for many years with members of the Vermont Medical Society. We do it on a complimentary basis. We actually create a website that houses everything in it, and people can then know where they're at, and then they can do the studies. And so when Jay talked about your business, he talked about creating a budget. That's a business budget. You need that. You also need a personal budget, one that shows you what you absolutely have to have in retirement, if that's what your goal is. And I know a couple of people who are on the webinar tonight, and I know that's probably one of their primary goals. So what's non-discretionary? You have to have. What's discretionary? What's fun money? Determine that. Then take count of what's actually happened. What you've got to do is you've got to then enter that information into a program. You could do it yourself, or you can have somebody help you like we do. And let's say that you were to retire early at 60, but now because of this drop and what's happened with the market and what you're able to save and earn, you may not be able to do it at 60. Maybe you should figure out, could I do it at 65 or later? And what's my exit strategy from this? What's my long range game plan? Am I invested properly so that I can make it through this next situation? And when I get in retirement, will what I have sustain me, or might it go down just like it has in this recent pandemic? These are all things that are important to put into your what if scenarios. So you review your investments. People ask me today, what should I do? Should I get out of the market? Well, probably it's the worst time to get out of the market because it's down. You're guaranteed to take a loss from that standpoint. But maybe it's a good time to take a look at what you should be doing with it. Maybe you should be rebalancing your assets. Maybe you should make sure you have investments that have downside protection in it, so that if the market should go down more, you're protected. Maybe you should look at programs that provide investments and income, so that the income you have in retirement. These are all things that are part of looking at an overall plan. Jay talked about all of these tax provisions in the plan, and he talked about the write-offs and the way we could go back and write off in the past, which is really very unique. So we talked about the payroll protection program. EIDL, we didn't get into much, but that's a way to borrow money, and some of it's grants and some of it's long-term borrowing at lower rates. But maybe if you take a look at the combination of the tax savings in that, you could really map your future the way in which you want to. Now, in the personal tax arena, the IRS has extended deadlines. They've made it so some of the contributions for defined benefit plans don't have to be made this year. They've made it so that if you are at the stage where you have to take a required minimum distribution, you don't have to this year. Maybe that's a big advantage. Maybe that's something that will help you get back on track. They've also made it that you can take loans out of plans, and you can take distributions, in many cases up to as much as $100,000. And people ask, is that really what I should be doing? I think you should look at the big picture first. You should see what's out there. What do you have for other things that could be considered first that wouldn't have the heavy impact on getting out of the markets when it's low, or creating a ultimately taxable event like a distribution or a loan that would have to be paid back in a period of time. You've got to plan these into an overall plan of sorts. But these are things you're going to have to address, and many of you have plans for your employees. You're going to have to address the hardship provisions of those particular plans, and the retirement plans, the hardship loans, and the withdrawals. And Jay even talked about the fact that maybe you could create a loss with a defined benefit plan with a large contribution that could help you. And that might create a loss for the past and correct some extra money. So there are there are just numerous ideas you can do, but just like your own field, you've got to explore them, and you've got to use that process. And if you're not trained at it, bring somebody else on board to help. Now, one of the things that I see today that make this whole pandemic has made us think about is, gee, if I was caught short on this, and I was the one who had this COVID-19, would my wills be up to date? Would I have trusts in place? Well, trusts to protect, they don't have to be tax-saving trusts. They could be trusts that just protect somebody from the misuse of funds that you've created in your lifetime. Let's say a child who inherits a large amount of money and decides to go out and have a lot of fun. Healthcare directives. You deal in this day in and day out. People very often don't have them in place when they're necessary. More importantly, they don't have them accessible when they're necessary. They might be traveling when something happens, or their children, who might be their surrogates, might not be there on the spot and have those available to represent the individuals. As doctors, you're in a unique situation to even let your patients know the importance of this and to have them available. But we live, lives that are really separated today. They're not like the old days where everybody lived in one town and stayed there forever. It doesn't work that way. We think it's important for you to review these, take them into consideration. So when you do it, I use the approach of a Rubik's Cube. The Rubik's Cube comes to us scrambled. That's the financial plan. Very often, it's not coordinated. It isn't brought together. You really need to coordinate the sides, and where appropriate, work with an attorney, work with a CPA from a tax standpoint, work with a planner from an investment or planning standpoint to start to align these sides. Because the sides have all different purposes. There's a legal side to it, all your documents. There's the tax side. Have you really considered everything from the standpoint of what you can save? There's an investment side. How are you allocating and what are you doing? And would your pro formas work in the long run? The insurance, if something happens to you, are you protected? In this case, it's both life insurance and disability insurance and even long-term care insurance. There are concerns for people who go through these situations. And then there are retirement plans, saving for the future, getting the maximum in the tax deduction you can get or that you really should be taking. And then there's estate planning. That's pulling it together. There's 126 different items that people have to pull together when somebody dies in order to settle those estates, and organizing that in advance and having it available and communicating it to other people are all really important things to do. So I'm going to play this. I don't know, I hope you can hear it, but it's really talks about what really happens in the course of a year and what an annual review can be. I might call it a financial checkup, okay? But that's really what we all need to do. So hopefully you can hear it. I'll try to turn it up so that it's louder.
A lot can happen in the course of 1 year, and it usually does. As things around us change, we change too. Our priorities shift. Our goals evolve. Because life isn't static, your finances aren't either. That's why an annual review is so important. It's a time to get together and look back at what's happened in the past year. Evaluate how it could affect your future. Then make adjustments to get you back on track to help you achieve your goals. We'll ask the key questions about your personal finances that need to be answered each year. We start with how your investments are performing. We'll compare your portfolio's performance against market benchmarks. Does your asset allocation meet your current investment needs and preferences? We may recommend rebalancing your portfolio if changes in your timelines or risk tolerance suggest modifications. Has your tax rate changed? We'll examine whether there are tax-efficient strategies that may boost your after-tax returns. How well are you managing your personal debt? We'll offer strategies to reduce your debt load or lower your interest rates. Does your personal retirement plan still reflect your priorities? We'll make recommendations and adjustments, if necessary, based on your future lifestyle goals. Have your insurance needs changed? Do your beneficiary designations need to be updated? We'll evaluate your requirements to assess whether you are properly protected with the appropriate products. We'll review your will and estate plan and note any items you may want to discuss with your personal attorney, especially if family changes have taken place in the past year. Your annual review is a yearly financial checkup that can give you a 360-degree picture of you. We'll answer the questions about where you are today so you can stay on track towards where you want to be tomorrow.
Well, I think, just like you come for an annual checkup, you really need an annual and hopefully even not looking back, but maybe looking forward. So I would like to, if there are some questions, entertain them. But I would simply say to you that, Jay and I are both available for personal questions afterwards, those important questions you have. As part of your Vermont Medical Society membership, you are entitled to a complimentary financial website, one that pulls everything together for you. And so that is maybe a good first step for people to take. There's not an obligation from that standpoint. But I think that if you use some of these strategies going forward, it can save you a lot of money. It can protect you in terms of what you're doing with your business and where you're going with it. And that's really what Jay and I want to do for you. We want to try and help you in any way possible. And hopefully some of these ideas, made sense from that standpoint. So could I just ask if there might be any other questions at this point? Okay.
John, can we just ask if this fulfilled the party's expectations, or if there's other topics they'd like to hear about?
Yeah. If anybody has another topic, if that's pertinent, COVID-19 has been everywhere. I can't go without getting 10 or 15 notices about it. But what I would say is, what I haven't seen anywhere else is those tax benefits that come along with it that people, I think, really walk by, they overlook. So, okay, with that, I'd like to thank everybody for attending and appreciate having had this opportunity to address you. Thanks.